Okay, this part two of our module 5 is going to deal with the fair tax option. It's something that's been going around for quite a while now, for at least 10 years that I'm aware of, maybe even longer. Some people know it as the flat tax. There's a little bit of difference between a flat tax and a fair tax, but not a lot. So if you hear one or the other, they're pretty close to being the same thing. So what the fair tax really is you never pay taxes on what you bring in. So every employee would be treated very similar to an independent contractor. Whatever you make, that's what the employer would pay you, except if you had employee deductions like a 401k or medical premiums, but you wouldn't have any taxes taken out. That's the big bonus. Now, I should put a caveat there. You would have no federal taxes taken out. States may still take out taxes if the federal ever went to this option. But we're only going to be talking about federal for the time being. Now, so you're going to pay taxes, however, not when you make money, but when you spend it. And then to try to make everybody equal, the government's actually going to pay you money back in a monthly probate. And it doesn't matter how much you make, they're going to give everybody the probate. It depends simply on your family size and how many dependents you have. So that's the only thing the government would ever know. They wouldn't know how much money you make because they don't need to know it anymore. Indiana has a tax like this right now, and most people are fine with it. I don't ever hear too much complaining about sales tax or how it's unfair to the poor, which it actually is. It's a flat tax. So everybody pays 7%, no matter if you make $100,000 or if you only make $10,000 a year. So that does hurt the lower income more than it does the higher income. But you never really hear anything about it just because people are used to it. And that very well could be what would happen with the fair tax option. People are complaining about it, potentially saying it hurts the poor. But I think if it ever did get passed, it would become like the state tax and people would just kind of forget about it. And it would just become the normal, just like payroll taxes now. All right, so some facts about the fair tax. What it would basically do is apply a 30% sales tax. That seems high, and it is, but it's going to make up for all the other taxes that you pay, including Social Security, Medicare, and federal income tax. It's going to take away the estate tax and the corporation tax. So it's going to take away a lot of things and replace it with one sales tax. Notice you're going to be taxed on all new goods and services. Right now in the state of Indiana, you're only taxed on goods. They're used or new. You're taxed on both. But you're not taxed on services. So if you go to your lawyer or your accountant or your doctor's office, they don't tack on a sales tax. In the new plan, it would tax any new goods and services. The exception here would be used goods. So there would be quite a market all of a sudden for used goods, which could be good for the resale values. Now, this is going to sound confusing, and you just kind of have to work with me for a second. The 30% sales tax would be the equivalent of a 23% payroll tax. Now, that sounds confusing, but I think if you see an example, it'll begin to make a little bit more sense. So just because it's a 30% sales tax, it's the equivalent of having your pay taxed at 23%. All right, and I'll try to explain a little bit here. If a higher amount is taxed, a lower percentage can be used to get to the same amount than if that lower number is taxed. If a lower number is taxed, then a higher percentage has to be used. So let me give you an example. A jacket that you want to go buy costs $77. And an income tax rate of 23% on the customer leaves the exact same sales tax as a 30%. Now let's see how that works. Option 1, higher amount, lower rate. So a normal income tax of 23%. If you earned $100 this week at work and you had 23% taken out of your taxes through federal withholdings, FICA taxes, then you would be left with $77 in your take-home pay. You could then go to the store, assuming no state sales tax. We're not dealing with state right now. You would go to the store with that $77 and pay for your jacket, and you would have no money left. Okay, that's with the 23% payroll tax. Option 2, lower amount, higher rate. Okay, so your take-home pay is $100. You didn't get taxed anything on your for payroll purposes with the fair tax. The sales tax at the store is 30%. So if you take $100, the jacket, if you take sales tax, so the jacket at the store, remember up here, it was $77. So if you take that same jacket of $77 and multiply it by 30%, that's how much tax you're going to pay. If you take 30% of $77, so let's do that. $77 times 0.3, 30%. Look what that gives you, the $23. You're paying $23 in sales tax, which when you add the two together, that equals $100. And again, you have no money left over. So yes, you're paying 30%, and that 30% is just the same as having 23% taken out of your check. I know it's confusing, but when you work it out, it works. And you can do that with about any dollar amount or anything. You take the same item, and you could just do a similar story here, and you're going to get it the 23% is the same. 23% payroll tax is the same as a 30% sales tax. So if you hear people saying it's a 23% tax, that's kind of true and kind of not. The sales tax would actually be 30%, but it's not as much as you would think. So with the fair tax, everyone would receive the probate to offset the sales tax based on your family size. And this is to ensure that everybody, even the low income, do not pay too much. So you're actually getting a monthly check from the government to help offset those high sales taxes. And then I have, I don't know if I have it right now, I'll get it, but I do have attached the 2019 probate chart. What they had proposed would be given out if it went into effect this year, and it's not. It's a long way from going into effect, but it gives people an idea to see how much, based on your family size, that you would receive from the government. And it doesn't matter if you spend the money or not. You could buy everything used, pay for no services, no new goods, and still get extra money every month. On the other hand, you could buy a lot of new things and a lot of services, paying a lot of tax, and that probate would help cut that off a little bit, but you could be losing more money. All right, so what the fair tax does, good things. It removes all of these taxes. The main ones that we would focus on is these first three, the FICA taxes and the federal income tax. And then for some, the retirement, you would not be taxed on your retirement money, which would be a huge benefit to a lot of retirees. Corporations would really like the corporate tax gone, even though it's been lowered with the Trump administration down to just over 20%. It would be gone completely. Basically what this does is it spreads out the tax amongst everybody, all the population, because currently only it averages, but around 50% of U.S. citizens pay no federal income tax. Yeah, they may have some taken out of their check, but they get it all back and plus extra, perhaps, when they file their 1040. So over 50% of people don't pay any tax. And so it's to try to make it a little bit more fair that everybody pays their fair share of taxes. All right, so the bad news about the fair tax, it's going to definitely discourage spending up front. Now, eventually, people will have to spend money to get the things. There'll be no more used goods left. So, but initially, I think corporations could get hurt. because people aren't going to want to buy new goods. They're going to pay that huge tax. The sale of used goods will definitely go up. Does it hurt the lower middle class, this fair tax? And that's what most of us are going to be concerned with. So let's see. And I'll kind of give you a big kind of a spoiler a little bit that, well, this tax is supposed to spread the tax, all the taxes equally amongst everybody. Not equally, as to say. I'm saying everybody pays their fair share instead of only 50% of people paying into the taxes. So it kind of a little bit of a spoiler to see what we're heading here. But the first example is just a common middle-class family. And I put that their total income between the two spouses is $70,000. So both of them make $35,000, which is pretty average for somebody with at least an associate's degree, if not higher. 2 kids under 16. And so what I did is I put down all the items that I thought that would be reasonable that a family of 4 at that income level would spend money on. And the first 8 here I put that I thought would be very normal taxable expenses, services and new goods that you would receive. And so you can go through and see how I did these. Food. How much was spent a week in food? This includes eat out, groceries, and there's no, of course, this hasn't been set into law, so the fine details aren't there, but would groceries be taxed at the same? That's kind of up in the air. So I put it at $250. Obviously, that could change a little bit. Utilities, those would be taxed. Your car repairs, oil changes, gas would all be taxed. And so when you add them all up, I got it to be $38,400 that you would have spent in new goods and services. So if you times that by 30%, you're paying $11,520 in taxes for that year. You think, okay, that's a lot. But let's continue on with this same example. So you're making $70,000, and so here's some of the items that aren't taxed that you still would be paying. You're repaying your student loan, that's a debt. You're not going to be paid tax on it. Your mortgage, that's a debt. You're not paying taxes on it. And then you buy some miscellaneous used items that you don't pay tax on. So I added that up to be $18,000. When you combine the new goods plus the tax that you paid plus the non-taxable items, you spent almost your entire $70,000, which would be pretty normal for most people. They may save up a little bit here and there and add to their savings account, but generally you spend mostly what you have. Okay, so the tax is $11,520. Now we're going to come back to that in a second, but first we're going to see how does that compare with the current income tax schedule. If you would fill out your 1040, and I did this for this couple, I just put a very typical items on the 1040, and I don't have that here. We're not going to get into that. But what I found is that this couple would ended up paying $11.79 in federal income tax. They would have paid so much in, gotten a refund, and then when you netted everything together, they ended up paying this much altogether to the federal income tax. And then they paid Social Security and Medicare. So a total they paid is $6,500, just over $6,500 in taxes. And you think, oh, well, compared to the $11,000, they paid a lot less with our current tax. True, but we're missing one final thing. With this fair tax, there's the probate where you get money back. So now we tack that in. So up here, they paid $6,500. Here you paid $11,000, but when you go to the probate schedule for a family of 4 who's married, you get back $7,779. So take that off the $11,000. And so your actual tax that you paid was $3,741 compared to the 3 up here that you would have paid $6,534. Now note this, you think, oh, well, you didn't include earned income credit and the child tax credit. Well, I did. I included that all right here in this number. This couple would have probably ended up paying $3,500 or so in federal taxes, but then they had some of the credits, earned income credit potentially, child tax credit, all the other credits. And it actually came out to be that this is the final amount that would have been on their taxes that they would have ended up still paying. They would have paid money in, they would have gotten a lot of money back, but net they would have still paid in the $1,179. So in this instance, with a very middle-class family making $70,000 with 2 kids, they are actually almost double better off using the fair tax option. All right, so let's see, and I kind of explain here. The big factor here, it depends on how much do you spend on new goods and services. So I put that this family, even though I said they only spent 38 or so thousand on new tax and goods and services, they could spend up to 45 and still be equivalent and still make money, or not pay as much, I should say, as the income tax. They could spend up to 45,000 and still be okay. All right, so let's do a second example. All right, single individual, middle income. They make 40,000. No kids, just a single individual. So I put here how much I would expect very similar items for a single. So instead of $250 a week, only $100 a week. That may be too much. I'm just giving some averages here. What the electricity, what your other payments would be for somebody who is single. And so I calculated out 21,000 in payments, in taxable payments. So if you take that by 30%, 63, almost 6,400. Non-taxable, very similar to above, 12,000. We don't care about that. We don't add that in. Total spending, you add up the 21 plus the tax plus the 12,600, and it's just over the 40,000 that they make. But that doesn't include the probate, the rebate. So they definitely would have money still coming in. They would be fine. So now we compare that $6,000. Let's see how they ended up. When I filed their tax return for that individual, the amount of federal income tax that they owed was $32.76 for the whole year. They would have been paying that, of course, equally on their W-2s. Social Security and Medicare, so total tax was $63.36. With the fair tax, we said up here how much they paid was the $6,000. Somebody who is single with no kids would get back $28.73. So you take that off of their taxes, and they ended up paying only $35.23. So again, they did better off than the current income tax, and quite a bit different. The fair tax was the better option. All right, now we come into our third example, and this one is even more geared towards the type of people that I serve with VITA taxes, and a lot of our students here at Ivy Tech are going to fall in this category. So let's see how this one is quite a bit different. Single mom with 2 kids living at home. She doesn't make a whole lot of money, maybe still going to school, so the income is $14,000. She also receives some child support. Child support in our current tax system is not taxed. So that's a huge chunk of money that's not taxed currently. And she receives some SNAP or food stamps as well. So how much she actually ends up spending. I put that out of the $24,000 that she gets, 18 of it goes to taxable items. So 30% of that is how much she pays in tax. And then some of the non-taxable items. So when you add everything up, her total spending is the $28,200, and then you have that $34,000 total that she had. With the current income tax, when you file her return, she actually doesn't pay any money. She gets a huge refund instead. So she ended up having federal income tax taken out of her check of $0. So everything she got back was free money. Through child tax credit and earned income credit, she received actually $7,000 as a refund. But then she ends up paying $864 on her job for Social Security, Medicare, 203. So in the end, she's actually receiving still a positive amount of money of $6,000. So that brings her actual pay, the 14 that she makes, plus the taxes refund, plus the child support. She actually has 30,000 coming in during the year. Whereas with the fair tax, she pays 5,400 in taxes and gets a rebate with her kids, herself and her kids, of 4,900. So she still ends up paying a little bit, not a lot, only 494. But compared to the refund of 6,000, this type of situation, the regular income tax is way better because of the earned income credit option and the child tax credit, which would be gone with the new system. So this is one of the cases where I said it's helping to spread out the taxes a little bit amongst everybody instead of everybody paying, instead of just half the people paying. Here, yeah, it's not a whole lot that this individual is paying, but they're missing out on the huge refund that they were originally getting. So some people say, yeah, that's fair. Some people say, oh, that's terribly not fair. That's all in the eyes of the beholder. The last option that I wanted to bring to your attention, another very common one, would be somebody who's retired. They're pretty low income now that they're retired, and let's see how this system would affect them. So this person receives Social Security of $18,000, which very little would be taxed in our current system, and receives retirement withdrawal, so from their 401k that they had set up, of $15,000. I went through and added up what I thought would be a normal taxable spending. So they received $33,000 total. Of that, $18,000 is taxable, so 30% would be, I would approximate that they would have to spend at the register $55, $56 in taxes. They're non-taxable, and then everything added up so far of the $33,000, they spent $31,000. If we compare that to the current income tax, this person who is retired would have only paid $303 in federal income tax, none in Social Security, and none in Medicare. So the total that they would have paid is only $303, not too much. They didn't pay any Social Security and Medicare because they didn't work. The fair tax, they would have paid the $5,000 at the register. Somebody who is single and widowed would receive $2,800 back. So the amount of taxes that they would have paid would have been $2,683. Compared to up here, the amount of taxes that they would have paid in our current system was only $303. So again, they pay more with the fair tax, and it's spreading the tax bill out amongst everybody. So is it better or worse? That's all in the eyes of the beholder. That's why there's partisan debates. That's something that one of the reasons I don't know that this will ever get passed is because it does affect the lower income, and people don't like to see that. So we'll see how that works if that ever comes to fruition. But I wanted you to be on the know on what it means. What does a fair tax mean? So you can debate that on a more educational level and have all the facts. With that, we will conclude this lecture. I hope you had learned something.